Welcome to another exciting episode of the Scouting for Growth podcast, where we explore the cutting edge of innovation across technology, finance, and insurance. I'm your host, Sabine VdL, and today we will dive deep into the transformative world of generative AI in insurance underwriting. Think about your policy, right? And think about, as a business owner, getting your next insurance premium quoted. Well, that is where generative AI can help in underwriters to quote faster, better, and more accurately. So I'm thrilled to introduce our guest, Alex Schmelkin, a visionary entrepreneur who is reshaping the future of insurance operations. Alex is the founder and CEO of Sixfold, a company at the forefront of harnessing generative AI to empower insurance underwriters with groundbreaking tools and capabilities. Before we dive into our conversation, let's set the stage with some high-opening statistics that highlight the immense potential of AI in insurance. So the global generative AI market in insurance was valued at $52.3 billion in 2023. It is projected to skyrocket to an astounding $641 billion by 2030. This exponential growth underscores the industry's recognition of AI's transformative power. Moreover, AI-driven underwriting is already delivering impressive results, with studies showing cost savings of 30 to 40% in underwriting operations and a staggering 50% increase in underwriter productivity. But that's not all. The future of insurance operations lies in agentic AI systems, as we know. It is predicted that by the end of the year, 90% of insurance companies will be utilizing AI in some capacity, with 25% of companies using generative AI expected to launch agentic AI pilots of proofs of concept. This trend is set to accelerate, with the market of AI agents forecasted to grow from $5 billion in 2024 to $47 billion by 2030. Alex and Sixfold are at the forefront of this revolution, pushing the boundaries of what is possible in insurance underwriting through innovative AI solutions. With his background as a founding team member of Uncork and Cake and Arrow, Alex brings a wealth of experience in building disruptive SaaS solutions and delivering exceptional customer experiences. Today, we will explore how Sixfold is leveraging generative AI to transform underwriting practices, the challenges and opportunities in implementing AI at scale, and Alex's vision for the future of insurance operations. So without further ado, let's welcome Alex Schmelkin to Scouting for Growth. Alex, we are so excited to hear your insight on how GenAI is reshaping the insurance landscape. So, welcome to the show. Hi, Alex. How are you?
I am doing well. Hello, Sabine. Happy to join you today.
So pleased to see you here on Scouting for Growth. Thank you very much for joining me. And my first question is, who are you and what do you do every day and what got you actually to build the business you are scaling today, Alex?
Certainly. So, my name is Alex Schmelkin. I'm CEO and founder of Sixfold. We are focused only on underwriting AI for the insurance industry. I've been in insurance for some time. I've called this industry my home for close to 20 years. I got started, though, Sabine, in what I'm now forced to say are the boring industries like fashion and luxury and e-commerce. I used to build swimsuit websites way back in the day, but I found insurance, or insurance found me, almost 20 years ago, and I've never looked back. And today it's all underwriting all the time.
That's cool, but I don't believe that fashion and e-commerce are boring industry, right? My
Well,
kids come from
I found the
fashion.
coolness of regulated tech, and all the fun kids were hanging out in insurance. So I've stayed here for the last couple of decades and obviously love it.
That's wonderful that you have been in insurance for over 2 decades. And I know you also work with amazing brands. So let's go straight into the topic we want to talk about, underwriting and generative AI, Alex. And so let's start with the opportunity. What do you see is the biggest opportunity we can see when we start looking at generative AI transformation within our industry, which is insurance, from an underwriting viewpoint?
So when we think about the industry, when we think about insurance, there's close to $7 trillion of premium written around the globe every year. And that also just happens to be about 7% of global GDP. It's an enormous amount of premium that's needed for the world to function. Essentially, this insurance is what allows us to take risks as humans, take risks as businesses, and if we think about all the advances that have happened in technology and AI in the insurance industry over the many years, really the most underserved population are the underwriters, the people who are making the decisions day in, day out on that $7 trillion worth of business that they're writing, trying to figure out is this a good risk? Is this a bad risk? And why? And so our whole approach and the biggest problem that I've been seeing in the underwriting side of the industry is so little support for the unsung hero, the underwriter, who is toiling away at their computer day in, day out, trying to figure out what's good, what's bad, what's my risk tolerance, and how do I manage my portfolio to have really good outcomes for the insurance company, but also for the end customer who's really counting on that coverage. So it's what leads us to think at least the biggest use of generative AI today in insurance is helping underwriters to find more accuracy, to be more effective, and to be more transparent in their underwriting efforts.
Yeah, no, I mean, it's fascinating that you actually highlight that the underwriter has been underserved, which I'm surprised because when you start looking at the operating model of insurance and you look as to where innovation goes, for sure, it's product innovation, service innovation. So trying to build new business model. I know a lot of technology goes into claims management because 70, 80, 90% of cost base often for an insurance company, right? When you look at the combined operating ratio, it's all about claims and trying to take cost out. But I never realized that underwriting was so underserved. So, Alex, what are actually the challenges that the underwriting
Yeah.
face, right? Why is that happening?
An underwriter, a typical underwriter, as they're figuring out, is this a good risk or a bad risk? Keep going back to ultimately what's their job day in, day in. They get flooded with submissions with applications for insurance. Let's just take business insurance, for example. So an underwriter works with brokers, and the brokers send over the submissions to them. And we've logged this, we've checked this with a number of our customers. The typical underwriter now is reading the equivalent, a few thousand pages, the equivalent of a novel every 2 to 3 days in documentation. So every 2 to 3 days in their job, it's the equivalent of flipping through a multi-hundred-page book of information. And these are not like romance novels or interesting Harry Potter fiction. These are information dense losses and statements of values and and exposures, and what we've expected of the underwriter is to be able to just keep consuming more and more. As more and more data has been available, as actually great third party resources have been popping up over the last few years to help me understand risk, we just keep collecting all of it and throwing it at the underwriter and saying, okay, now you have even more information. Can't you underwrite faster? Can't you do a better job? And the answer is no. It's information overload, and we're expecting too much. And that's the connection that we've been trying to make here. That enter language models, enter generative artificial intelligence. Kind of for the first time in human history, we now have the ability to take in a nearly limitless volume of info. All of those romance novels every 2 to 3 days. and help the underwriter to see through them, to find the patterns, to actually, without having to read every single word on every single page, point out to them what are the most important things inherent in this risk application. So we're trying to save them from doing all the manual reading, but then give them the opportunity when they find a risk nugget that's super interesting, that helps them to really understand the end customer and to write them the best type of insurance policy, then give them the freedom and the time to do the extra research and get the best result for the end customer.
So help us understand how that works, right? So we have, as underwriters, we're reading a novel every 2 to 3 days, and you are going to apply to that data generative AI, the sixfold generative AI. Tell us how that works and how you actually deciphering, really understanding what is good data from bad data to actually give that insight and then point me, let's say, as an underwriter, said, okay, Sabine, now you need to spend more time looking at this data set here.
Yeah. Here's where it starts. The breakthrough that we found pretty early in our R&D process when we were building our AI models was that we needed to make the AI aware of each of our customers, each insurance company's unique risk appetite. This is where it all starts. So basically, we work with a customer to take their underwriting guidelines, essentially their rules around what's a good risk and what's a bad risk. And we quickly teach the AI how that insurance company thinks about risk. The types of, I'll stick with business insurance, the types of businesses that they like to write, the types of operations that are generally more or less risky. We then marry those guidelines with a recent set of decisions that that company has made inherent in the last few months of what have you been binding, what have you not been successful in closing, is really all of the thought process that the underwriters have in applying those guidelines. So we take the guidelines, we marry it to some recent decision, your recent data, and what emerges from that is this underwriting brain, we call it, an underwriting robot or an underwriting brain. And now this brain is installed right at the front door, sometimes right in the underwriter's inbox, where we know still a lot of business is transacted. But basically, just as the broker is sending something over to the underwriter, this robot, this brain that's been trained, takes a quick look at it, and it opens up all the attachments, and it figures out, well, what's the name of the business that I'm being asked to underwrite? And the very first thing it does, Sabine, is it goes out and it tries to find what can I learn on the public web about this company. And it goes off and the model does its own research. So it says, I'm trying to underwrite Joe's Pizza on the corner here. And let me go out and let me look and can I find Joe's Pizza at the address they say they operate? What do customers have to say about Joe's? Have there been any lawsuits against Joe's Pizza? Joe's Pizza is not a public company, but assuming they were, what does the SEC have to say about Joe's Pizza? And what are various other public sources that we could find out about them? And the model brings all this data back to the underwriter so they can start getting a sense of all this broad, expansive research that's online. The next thing that happens is the model takes a look at all the data that came from the broker or from the customer. So this is the application they filled out. This is their prior claims and prior losses. It's all of the different things they want to insure. So maybe they're insuring their auto fleet or their properties or various other resources. And now the AI essentially looks through all that data and it finds, well, what is the underwriter even going to care about? If you send me some data, here's something we learned. Don't summarize it for the underwriter unless the underwriter actually cares. If the underwriter is not looking at something that's sent over because it's not part of the guidelines, don't waste your time on it. Only surface for the underwriter those guideline aware good things and bad things, so ultimately they can get to a much faster analysis and understanding of the risk.
Yeah, and that is what is really key to actually speed time to market, right? I remember once upon
Yeah.
a time, when I used to get my business insurance, I could probably wait a couple of weeks to get a quote. And I know how can that be? But now, when I look at my insurer or my broker, and we are usually going through renewal, this is done within a day. But that is because the data is there and actually they know, how to evaluate the business and actually how safe what the activity the business is doing or not. But so my next question is, as you are implementing those really sophisticated generative AI bots, right? This brain, this engine to allow the underwriter to be more efficient, more effective, and actually allocate their time, I assume, for more complex activities. What is the role of the human underwriter when you start looking at the future of AI?
Yeah, we believe that for as far as the eye can see, the underwriter sits at their command and control center, overseeing all this activity. The underwriters, the essence of their value is not all this research and picking out all the little details. Their value is crafting the best proposal, the best quote, the best product for their customer. And that takes a level of analysis and reasoning that we believe the human should very much be in charge of driving today. Um, what we attempt to do is to arm the human with this bevy of different agents that can go off and do a bunch of things for them that are the less value producing parts of their jobs. I'll give you one example. In lots of segments of insurance, both life insurance and business insurance, after a risk is bound, after the policy is eventually bound, the underwriter has to go back and they need to justify the decision that they made. Some people call it a risk memo, a risk narrative. There's all different terms. But basically, it's a short to sometimes multi-page document where the underwriter is saying, this is why I wrote this policy for Joe's Pizza. And every moment that the underwriter spends on that activity, they're not underwriting new business. They're not bringing more. They're not spending thought in the next submission, but it's needed for compliance. It's needed for documentation. It's also needed to train the underwriter into their viewpoint. Um, Here's how we should flip it on the head. You say, what role does the human have? Sixfold can generate that narrative, but just the facts. We could do 80% of the work, deliver the narrative. We wrote this risk. Here's what the losses look like. Here's what the exposures look like. Here's the properties. Here's the auto fleet. Now let the underwriter spend only 20% of the time that they've previously done justifying it, explaining, adding the opinion, adding the reasons. The human does the human thing. Let the robot do the core research. And that's just one small example of where we think the human gets so much more effective when they're working along beside the robot that helps them be more accurate and more efficient at their job.
Yeah, and that is necessary actually when we actually start looking at the speed of change and how AI
Yeah.
is transforming everything we do. So I know, Alex, you are in New York. And so when we start looking at regulation and the future of deploying AI system within insurance organization, how can insurance companies ensure that they are adopting AI in the right way and aligning that with their processes, their workflow, the way they do business? And I assume, when you work with one insurance company is very different from working with another one. But at the same time, overlaying the regulatory frameworks, which are, I guess, still very siloed and fragmented across the globe.
Totally fragmented. I'll share what some people have now called a weird thing about me and maybe our company's posture. We love working with the regulators. We actually really love it. And let me explain why. We were so fortunate. We started in the US. We started working with North American insurance companies. We've since expanded to the EU and the UK. Um, but in the US, before the first state passed its AI and insurance regulation, which happened to be Colorado, we had a chance to meet the commissioner and the regulatory team there. This is going back 2 years. And we had an opportunity to demo the early stages of the Sixfold solution. and to actually meet with the regulator and show them this is what we're thinking of doing. And this is how our system will remain transparent, will remain compliant, and will show its work, will present the ways that it's not being biased in its outcome. And hearing from the regulator's perspective what they truly care about, it cuts a lot of the noise out. So a lot of times the insurers are saying, well, I'm not sure the regulators would allow this, or my compliance team won't allow this. The reality is the regulators understand that AI is here. So they've already embraced it. Now, they're not as ahead of it as we would like them to be as an industry. They're not getting everything right, but I don't know how we could expect them to. But actually, by putting a few fence posts around the problem that we're trying to solve, they've forced the conversation and they forced the industry to respond to it and to start rolling out the way that we're doing some of these the AI transparency part of the models. So I enjoy it. We love it. It is a bit of chasing the unknown. In the US, there's 50 state regulators loosely coordinated by one governing body. Certainly, there's the EU AI Act, which in many ways has advanced the conversation, and in other ways actually isn't quite telling EU insurers precisely how to follow the rules. UK is getting a little bit better, but I personally think that the regulatory framework gives us something to respond to and allows us to understand the transparency concerns of the commissioners and the regulators and ultimately build the better product for the insurer.
Yeah, but here regulation is not the challenge. So when you start looking at the obstacles, what are the technical, the cultural obstacle you see? Because one of the key things we have heard over the past few days as we come out of a major conference here in London, Alex, is how do we do AI for underwriting at scale?
Yeah. It is there's single challenge that we run into everywhere, and it's actually the same one everywhere. It's underwriter trust. The underwriters, despite being overworked, despite not having enough of them, despite it being a very challenging job, are really good at what they do. And the reason they're so good is because they've been trained over the years in this culture of doing everything you can to get to the right answer. They really value their job. Underwriters are the front line to protect the insurance company from bringing on bad risks. So the hardest thing that you have to do is to convince the underwriter that using an AI is accurate, that it's real, that it's bringing in information. Because the first few experiences that an underwriter has with a bad AI, they're not going to go back, maybe ever. And if you tell them a fact that's wrong, if you analyze something with too much opinion, if you don't make it super easy for them to use, they're never going to adopt it. We weren't as good at this in our early days as we were now. In our early days, we actually would ask the underwriters, "Hey, it's super easy to get started. Give us your guidelines. Give us your prior data. We're going to run 100 submissions. Now go through all 100 and tell us are they right or are they wrong." And the underwriter would smile at us and they'd be like, I don't have time to go through 100 submissions and tell you whether or not you were right or wrong. Well, obviously they don't. So we've had to build an increasingly better series of automated accuracy validation so we could tell the underwriter with total transparency, hey, today our models are underwriting only about 78% your human standard. Let's keep iterating through back data and doing some more reinforcement training. I'll give you the last trick that we've learned here, or maybe the most important one. Uh, we're always asked, how accurate do you have to be to get underwriter trust? The answer is only about 85 or 86% accurate. It's
Okay.
not 100 because there's no 100% accuracy. But once the robot is underwriting at about that mid to high 80s level, then the underwriter says, that's good enough. I can lean into it. I could tolerate the occasional AI mistake, but by and large, this is going to help me get to the right conclusion.
So it's interesting that actually an underwriter is happy with, an 86% accuracy because often, when we start looking at claims and some of the ventures I work with, try to educate claims adjusters and claims executives that 100% accuracy is not possible. And actually, let's say 86, 90% accuracy is actually Good. So it's very interesting to hear that from you. So when you actually start looking at building those audit frameworks, you mentioned that you have to look at backdated data, if I understood that well, Alex.
Mm.
How far do you go? Because for me, the great thing is when you start looking at your 76 or your 86 accuracy, is every year or maybe every 6 months to actually reevaluate the accuracy of the model, of the decisions, but looking also at what has happened in the past. Are you able to look at what has happened in the past and help those underwriters actually adjust their practices and methods internally?
We can, Sabine, and the answer sometimes surprises our customers when they get started. We actually don't like to go back that far.
Oh,
Sometimes, most often, 6 months is enough. Sometimes we'll go back a year. And for an underwriting team living in the environment we do today, particularly in commercial insurance, the answer is often obvious to them because the way you were underwriting a year ago is not completely reflective of what your appetite is today. Risks change so quickly. Environmental threats and catastrophic threats change so quickly. Cyber threats change so quickly. Even on the life insurance and the income replacement side, medicine trends change not as quickly, but quickly. And so we don't go back that far
okay.
because what we're trying to do is what does the current underwriting team look like? The next question, though, let me share. The chief underwriter then says, "Well, hold on a second. My mandate going forward for the next 12 months might also be a little bit different. I don't want to over index on my prior 6 months of decisions because now I actually think, I want to take on a little bit more auto in this region and I want to increase my exposure to manufacturing here." And so this is why the system is both sensitive to the past data, but also you can reinforce it. As an underwriting team, you can guide the training towards my goal for the next 12 months is I want to be more expansive in this area or less over there. And that's the way you don't over bias the data with what you were doing a couple of years ago.
Yeah, so that is super important because what you're also highlighting, which is I think is very important when we start looking at the emerging risk, you mentioned cyber, risks are changing. And so data, historical data, may not be a good indicator for underwriting future risk, right? Because the landscape is changing so fast. You mentioned climate, cyber. We can look at health as well. All those risks which need to be underwritten may not be well served if we look at data which is too old, looking at the market which is changing. So, how do you envision data privacy and compliance shaping, you know, deployment of artificial intelligence today?
Yeah, there's something funny that we've been running into, which every compliance officer understands, but we really have to keep top of mind when we talk about privacy and the training of an AI model. So typically, when you sign up for an insurance product, like let's say life insurance, you're applying for life insurance, you agree to turn over some very personal, private medical facts in order for the insurance company to figure out how much is it going to cost you for your life insurance. And it's fair. It's you say, okay, in order to get that quote, I'm going to have to tell them a little bit about my health and my history. And you feel that that's part of the transaction. But what you haven't given the insurance company permission to do is now take that data that you've given to them and make their automated AI underwriting algorithms any better. All you've really done, and it's all in the terms and conditions of what you sign, is you say it's a quid pro quo. I'm going to give you my data so I can get a quote. And so therein lies an issue of privacy and the transparency within these models. So it's very important that when you train an AI model, it's not retaining anything that you actually don't have permission to retain.
Okay.
And that's a very challenging thing to do with older style machine learning. Machine learning is not all that old, but with machine learning, when you pump a lot of data in, a lot of predictions come out, but it's difficult to say what's actually driving that prediction. Whereas when you use more reasoning based AI, generative AI, or with models like ours, it's able to prove I'm not retaining this data, or I'm not using that fact to come to an outcome. And so we're able to much better control the personal information that's driving the future underwriting decisions.
So let's talk about the value of differentiation when we start looking at Sixfold, Alex. And so what core differentiators, right, does your platform has vis-a-vis others? How do you work across multiple market? I love seeing you when you come to Europe, and I hope I will see you very soon when I make my way to New York. So you are an international platform, and you work collaboratively with a lot of insurers internationally. So why do they come to see you?
There's one single differentiator that sets us apart. And then there's a lot of other nicer things, but there's one. We focus nearly all of our R&D on having our AI understand your unique risk appetite. That was our breakthrough. And when we figure out how to make the AI think and act and feel that risk appetite, just like an underwriter's brain does, it unlocks accuracy. So what we're really striving for here is accuracy. Our differentiator to get there, it's not about better summarization. It's not about getting a better industry code, which, by the way, we think we have the best, but it's not about that. It's about understanding your guidelines and then getting to that human level outcome. And that's what we believe we do the best because we're so focused on the risk tolerance and the risk accuracy.
Yeah. And so can you us through an example of one of your projects? And I have to say, I met you when we were both with Zurich Innovation Championship, Joel and Anthony. And so it was a lovely pleasure to meet you and really understand the platform because I read about you when I was doing my research on generative AI and everybody was mentioning your company. So tell us, share with us an example.
Yeah, I'm happy to share that one in particular because actually they were so open about the presentation and the work that we did with Zurich. So we're working with Zurich North America and their middle market team, and like many other carriers, what they're trying to do is to find efficiency in their underwriting operations. And during the Zurich Innovation Championship, which is an amazing innovation challenge where they bring a bunch of insurtechs there and they find real business problems. Um, they We got partnered with the North American team who sponsored us to say how can we find more efficiency and get time back into the underwriter's hands so they can focus on higher level problems. And the way we did it is similar to some of the processes I described here. We understood the risk questions that an underwriter goes through in order to evaluate, is this a good risk or a bad risk? We looked at those manual processes, those narratives that you have to write after you bind a risk, and said, how can we improve the efficiency? And ultimately, in a very fast time, gave 50%, 50% of that early evaluation time back to the underwriter so they could focus on other things. And what does an underwriter do with that 50% of time? They pick up more for a certain premium within any given period. They spend more time crafting a better quote. Not every piece of business is a perfect case. Sometimes each has a little bit of warts or hair on it. And so the underwriter has more time now to find the right exclusions or endorsements or what do they have to add to the policy. Ultimately, we want better quality risks done in a faster time. And that's a good example of where we worked really closely with a customer to get there.
Yeah, absolutely. And I think it is very important. You started when we started talking, mentioning, at the end of the day, you are building an artificial intelligence brain, a scalable approach for underwriters to really be successful when they underwrite. And your approach is about really defining that risk appetite and allowing the underwriters to actually be accurate, constantly with their customers, which mean that in the end, that drive transparency and trust for the underwriter, who therefore can actually retain their customers and actually free time to potentially look at new markets, find new opportunity for the business, increase their ability to underwrite. So I would like to go into the future a little bit, actually, Alex. And so What emerging artificial intelligence trends are you seeing emerging? Which one do you feel are game changing? And which one are you going to start implementing when you start looking at Sixfold?
So what we're seeing today and what we're living through today is definitely the most thrilling part of my tech career, probably any of our careers in tech or in insurance because of the pace of change. Um, just briefly, when we first started doing this, which was only about 2.5 years ago, a new model would come out every few months. And then it became monthly, and then it's weekly. And now it's daily. Every day, Sabine, a new model comes out. And it takes everything we can to hold back our AI engineering team from trying everything and jumping in. But I'm no great predictor of the future, but here's what we've been seeing and certainly the trends that we think are going to influence the insurance market so much. You've heard a lot about the strength of the reasoning models that are coming out. And that essentially is an AI model's ability to uh, uh, use its own language, the way that it thinks through a problem, to double back on itself and check itself for accuracy and think through a problem more expansively than the first generation of LLMs, language models that came out. So this is how we're using these reasoning models. When we take a reasoning model which can think more deeply or accurately, one, we're able to solve harder problems. In our early days, we could say, like, what were the losses for this business over the last 4 years and break it down by product. Now we could say, what were the losses over the last 4 years? Break it down by product. Which of that in those given years was in or out of your appetite? Are there any conflicting sources that say the losses were this, but the claims were that the underwriter needs to know about? Oh, and what third-party data sources should I be thinking about on my own to go out and identify to make this a better risk? And all of that is because we're reasoning through, we're thinking through it a little bit more like an underwriter. So what we're going to see happen over the next year or two, probably even sooner, is the explosion and power of these reasoning models getting deeper and more relevant and more important information. Um, the next thing that I think is driving so much of the excitement that we have in this kind of next wave of AI is companies that are figuring out ways to be less transactional and looking at their portfolios more holistically. And so again, I'm limiting this to insurance. There's lots of crazy things that are going to happen in AI broadly, but in the insurance space, we're getting good. We're not exceptional yet, but we're all getting good at individually dealing with a transactional risk. Risk comes in, is it good? Is it bad? Why is it good? Why is it bad? What's next for us, certainly Sixfold, and I think for the industry, is using AI to look at your entire portfolio and saying, if you just adjust this one little factor, I might have changed the decisions that you made over the last 6 months. Or your underwriters keep writing this class of business over and over and over again. It's not really in your guidelines. Why are they writing it? Why are they binding it? Well, we can use AI to actually jump in and see all the different risk factors that are driving their decision. Ultimately, maybe you shouldn't be writing it. Maybe you should be writing more, but it gives you this insight on a broader basis. And we're pretty sure that this portfolio view is kind of the next big horizon. We're going to invest a lot there, but I think the industry is getting increasingly excited about it.
Yeah, no, I've actually heard just last week a lot talking to various insurers. There was, on my panel Zurich, I had WTW,
Yeah.
I had Swiss Re, and so the interesting thing about this conversation was, yes, we are moving to portfolio thinking, the ability to make better decisions faster. But also, I think what was interesting around that conversation is actually having clarity around what is a good risk or poor risk, what is a profitable portfolio, what is a less profitable portfolio, and therefore, how do we tweak our decision, whether we come out a specific risk, what changes we need to make.
Yeah.
So that takes me, about this excitement around AI, about what a lot of people are talking about around agentic AI. And so, Alex, where do you see this type of system being applied when we start looking at underwriting to help us make better decisions. And, how do we make sure we still have this human oversight? Because when we have those little agents doing everything for us, we still need to manage reputation. We still need to make sure we do proper underwriting risk assessment. How do we do that with
Yeah.
agentic AI?
Yeah, so these AI agents are fabulous, and we make use of them. We have an agent that does research. We have an agent that does fact checking. We have different models that do many of the different things an underwriter needs to. And all of those models are themselves coordinated by another type of agent that knows all the different capabilities that for us an underwriting model can do. But there's the number one agent, and that's the human in the loop. That's the underwriter themselves. I really have a view that in so many classes of business, the underwriter is going to be retooling themselves over time to learn how to use all these agents to make themselves more effective. It's not unlike coding. Senior engineers are finding so much more productivity and efficiency because they're using coding tools that are helping them generate code and check their code and bug. It's the same, I believe it's the same thing in underwriting. We're going to have an underwriter in a cockpit sitting at their computer or whatever visor they might be wearing in the future and having at their disposal a research agent and a pricing agent and all these things that can go off and do work for them, delivering the results back to them so they can be the ones making the final decision. Will there be parts of the business that today and very quickly tomorrow we're going to seek more automation? Of course, we should. There's no question. There's lots of insurances that actually the customer, the broker, and the insurer and the reinsurer benefit from more automation, more straight through processing. It reduces expenses, it improves claims. And there might be, and we will find them, those types of insurances where a little bit more automated decision making is the right choice. But in those cases, there will still be humans looking at all the automated decisions and being certain that they're done in a way that's protecting both the losses and the accuracy. The human's going to be involved, and for as long as you and I are probably in this industry, we want them to be.
Yes, absolutely. So, talking to our chief underwriting officer, which is out there, who is out there actually, Alex, what is one key takeaway? Do you want this chief underwriting officer or the insurer to really understand when we think about artificial intelligence? How do you make sure that they really understand that this is going to transform their lives for the better, our industry for the better, but also the way they underwrite risk in the future?
We've chosen to take, Sabine, a very underwriter centric approach. And when we speak to chief underwriters, what we say is we aim to keep your underwriting team at the center of this operation. They are the most important arbiters, the most important salespeople, the most important researchers and risk evaluators. So we've chosen to take the approach to keep them at the center of this operation as the most important, I think, human that lives at the insurance company. And we also have an interesting approach with the chief underwriter. We say, listen, we don't, as Sixfold, have a bias as to what's a good risk or a bad risk. What do we know? We're smart. We know insurance, but we're a bunch of AI guys. You have decades of experience, or your company has hundreds of years of experience evaluating risk. What we bring to the table is an amazing AI brain that can learn all of that and understand your approach, and then over time guide you maybe to better outcomes and better loss exposures, but ultimately keep the underwriting team and the underwriter in the driver's seat. And that's why we invest so much in understanding your risk appetite, Mr. or Mrs. Chief Underwriting Officer, because we believe that's truly the unlock to getting this right.
Well, Alex, this is fascinating, an amazing conversation. And so, if a chief underwriting officer, one of the insurers which have not interacting with you would like to reach out to Sixfold, what should they do?
Uh, First, you can easily come to our website. It's sixfold.ai and check out a little bit more about us. Feel free to connect with us on LinkedIn or send me a personal email at alex@sixfold.ai, and I'm more than happy to help understand how it works and set up an evaluation.
Well, Alex, thank you so much for joining me on Scouting for Growth. I've really enjoyed our conversation today.
Thanks so much, Sabine. It was a great pleasure.
I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.